Hey, Lower Mainland homeowners. I'm Tim Hill, your local mortgage broker based right here in North Van. Dreaming of a new kitchen, a backyard deck, or maybe turning that basement into a rental suite? Renovation mortgages can make it happen without draining your savings. In this video, I'm breaking down everything you need to know about renovation mortgages, how they work, why they're a game changer for your home, and how to get started in our pricey Lower Mainland market. Stick around for my top 3 tips to save money and boost your home's value. Let's get renovating. So, what's a renovation mortgage? It's a special type of mortgage that lets you borrow money to buy and upgrade a home, or refinance your current home to fund renovations. Here in the Lower Mainland, where even older, worn-out home prices are well over $1 million. These loans are a lifeline for turning fixer-uppers into dream homes, or boosting your property's value. There are 2 main types. First, purchase plus improvement mortgages, like the CMHC's program, let you buy a home and roll renovation costs into the loan. For example, you buy a $900,000 bungalow in Burnaby, add $100,000 for upgrades, and finance it all in one mortgage. Second, refinance plus improvement loans let you tap your home's equity to fund renovations. If your Vancouver condo's worth $800,000 and you owe $400,000, you could refinance to pull out $100,000 for that new kitchen. Why is this a big deal? With rates close to 4% right now, you can borrow at low rates instead of maxing out high-interest credit cards or dipping into savings. Plus, renovations can boost your home's value. Think 10 to 20% more in a hot market like ours. Let's talk benefits. Because renovation mortgages are a secret weapon for Lower Mainland homeowners. First, they're a ticket to affordability. Say you're eyeing a fixer-upper in East Vancouver for $1 million, cheaper than the $1.5 million move-in-ready homes nearby. Purchase plus improvement mortgage lets you buy it and budget $150,000 for upgrades, all in one loan. Your monthly payment might be $900 a month more, way better than stretching for a pricier home. Second, renovations increase your home's value. A modernized kitchen or a legal rental suite can add $100,000 or more to your property's worth. In June 2025, Metro Vancouver's benchmark price was $1.2 million, and renovated homes often sell faster and higher, especially in hotspots like Burnaby or Richmond. Third, rental income. Turning your basement into a suite can bring in $2,000 a month or more in Vancouver. That's $24,000 a year to offset your mortgage or fund your lifestyle. I've helped clients use refinance loans to build suites, and it's a game changer. Finally, you stay in your home. No need to move to Langley for space. Renovate your current place to fit your family or work from home setup. It's about making your home work for you in this crazy market. So, how do you get one? Here's the process, step by step. For a purchase plus improvement mortgage, you find a home and get quotes from contractors. Let's say $80,000 for a kitchen and bathroom overhaul. Your lender, often through CMHC or SAGIN, approves the home's future value post-renovation. So, a $900,000 house in Surrey might appraise at $1.1 million after upgrades. You borrow the purchase price plus reno costs, up to 95% of that future value if insured. Funds are held back and released as work's completed, usually in stages, like 50% upfront, 50% after inspection. For refinancing, it's simpler. We appraise your home's current value, say $1.2 million for your Coquitlam townhouse. If you owe $500,000, you might pull out $150,000 in equity for renovations, as long as you stay under 80% of the home's value. Rates might be slightly higher, but it's still way cheaper than a credit card. The catch? You need solid contractor quotes and a plan. Lenders want to see receipts, and CMHC might require inspections. As your broker, I handle the paperwork and connect you with lenders who love reno loans, like Scotiabank or Home Equity Bank. Now, let's be real. Renovations aren't all smooth sailing. First, costs can overrun. That $100,000 kitchen might balloon to $120,000 if you hit unexpected plumbing issues. Pretty common in older Vancouver homes. Always budget 10 to 15% extra. Second, timelines. Renovations can take months, especially with permits in the Lower Mainland. If you're banking on rental income from a new suite, delays could really hurt. Third, lender rules. Some banks are picky about contractors or want detailed plans up front. Alternative lenders might be more flexible, but charge higher rates. Think 5% instead of 4%. Finally, the economy. With US tariffs threatening a $69 billion hit to Canada by 2028, the Bank of Canada might cut rates further, keeping mortgages cheap. But a weaker economy could slow home value growth, so your RECNO might not pay off as fast. As a broker, I'll help you weigh these risks and pick a plan that fits. Renovation mortgages are a powerful tool to upgrade your Lower Mainland home, whether it's a fixer-upper in Surrey or your forever home in Vancouver. Here are my 3 tips to nail it. First, get quotes early. Work with licensed contractors and get detailed estimates to lock in your loan amount. I can recommend trusted ones. Second, plan for the future. Renovate for value. Kitchens, bathrooms, and suites are gold in our market. Aim for a good value boost. Third, work with a broker. I'll shop the best rates, handle lender rules, and make sure your reno loan fits your budget. Ready to transform your home? Drop a comment. What's your dream renovation? Contact me or subscribe for more Lower Mainland mortgage tips. Let's make your home shine. Vancouver. See you next time.